consistently profitable small business. It changed how I think about business finance. It changed how I advise my clients. And it is the core of virtually everything that we do at Sidekick Accounting in some way, shape, or form. That framework I'm talking about is Profit First. If you've heard of it, great. I want you to stay with me because we're going to go deep today. And if you haven't, you are about to have a moment. But first, I want to welcome you to the Profit Points podcast. I'm Megan Schwan, your accounting sidekick and the CEO of Sidekick Accounting. So traditional accounting gives us this formula. You've probably seen it. Revenue minus expenses equals your profit. And mathematically, that's correct. But behaviorally, in the real world of running a business, it's actually a little bit of a disaster because when you subtract expenses from your revenue and call what's left profit, you're designing a system where profit is what's left over. And as Parkinson's law tells us, expenses or anything expands to fill what is available. So in this case, that's revenue. So in other words, if the money is there, it gets spent. You may have noticed this before. That might resonate with you. But by the time you've paid your contractors and your subscriptions and your payroll and your marketing and every other operational cost, whatever is left over is often not a whole lot. And when you start the whole cycle again next month, it does the same thing. So Mike Michalowicz identified this problem and he wrote a whole book about the solution for it. And that book is called Profit First. And the premise is really beautifully simple. Instead of revenue minus expenses to equal profit, we flip it. We take revenue and we minus profit, and what's left over equals expenses. So you take your profit first before your operating expenses, because that true profit needs to cover owner's pay, tax savings, and strategically reinvesting into your business. You allocate profit to a separate account the moment that revenue comes in. And then, this is the key, you run your business on what's left over. So now you're prioritizing profit instead of reacting to profit. So in practice, how does this work? Well, you open multiple bank accounts. The core 5 are an income account where all your revenue is deposited, a profit account where your profit allocation goes, an owner's pay account, a tax account, and an operating expenses account. So every time money comes in, we typically want to do it on a schedule. So whether it's daily, I wouldn't recommend that, but weekly or on a schedule that works for you in your business, you allocate it across these accounts based on your target percentages. Those percentages are based on your real revenue, the past, and your current capacity. So percentages are based on real revenue, the past, and your current capacity. Profit First provides target allocation percentages, which are called TAPs, that serve as guideposts depending on your revenue range. So if you make between 0 to 250,000, it's going to look different from when you make 250 to 500,000. So those revenue ranges have different guideposts associated with them. Mike did extensive research on top performing companies to come up with these TAPs. It gives you as an owner a target and a direction to aim for. Most businesses don't start at the TAPs amounts. They start with their current allocation percentages or CAPs. And those percentages then shift as your business stabilizes and grows. A business at 500,000 might have a profit target of 10% or higher as overhead becomes more efficient at scale. So the beauty of this system is that it uses human psychology and habits in your favor instead of against you. When the money is in a separate account labeled profit and you have a rule that you don't touch it except for quarterly distributions, when it's in that separate account, it stops feeling like available cash is there to spend. It becomes yours. That profit becomes non-negotiable. You're not spending it on expenses. And your business learns to operate within those boundaries of what's in the operating expense account. So you make decisions differently when you know that account is the limit. You use what's available. Except now we have these different buckets where things are prioritized and set aside. And now you only have that operating expense to work with. So if I give you a concrete example, I'm going to say that a business brings in about $15,000 a month in any given month. We're going to use profit first allocations, 10% profit, 50% owner pay, 15% taxes, and then 25% to operating expenses. So what happens is that now when that $15,000 comes into that income count, you transfer those into those different buckets. It ends up being about $1,500 to profit, $7,500 to owner's pay, $2,250 to taxes, you have $3,750 in your operating expenses to run your business on in that month. That's what you have for software, contractors, marketing, and everything else operational. Now, you might be thinking $3,750 is not enough. And that instinct is definitely worth examining, because if your current operating expenses are higher than that and you're within that range, Profit First will surface that immediately. It'll bring it to the surface, and it will force the question of whether all of the expenses you are currently paying are actually necessary. And that's not a comfortable question, but it is the right question. The goal is that over time, to bring your actual expenses in line with those targets, you may need to cut expenses. You may need to renegotiate contracts or grow your revenue faster than your expenses to be able to close the gap. And then at the end of the quarter, you take 50% of what's accumulated in your profit account, and that acts as your distribution and bonus, a reward for running a profitable business. The other 50% stays in your profit account as a reserve. And that distribution is powerful, not just financially, but psychologically. What it does is it helps reinforce the behavior, because now your profit is real. Now profit is yours. And profit is the point. Haha, get it? Profit points. I know what some of you are thinking. My margins are too thin to allocate any profit right now. And I hear you. Profit First actually addresses this. We address this when we work with our clients. The fact is that you don't have to start at 10% profit right out of the gate. You start where you are. I mentioned those caps. This means that profit might start at 1%. Your current allocation percentage might look different from the taps that are recommended. And 1% is a great starting point. The point is to begin the habit, to start allocating something to profit for every dollar that comes in. And then you incrementally increase that percentage, maybe 1 or 2 points every quarter. And you do that until you reach your target. The goal is small, consistent progress over time that adds up to transformational results. Doesn't that sound great? So, action step. Read or listen to the book Profit First by Mike Michalowicz. It's available literally anywhere. You might even have it on your shelf. Better yet, you can also book a strategy call with me at Sidekick Accounting, and I will give you a free copy, and we can walk you through how we implement Profit First for our clients at your exact stage, because we help clients at every stage. You don't have to figure this out alone. The system exists. The support exists. All you have to do is take the first step, and this system works. That's the other part. Is like, it's not just in the atmosphere of like, oh, this sounds nice, but no, this actually works. And we've had some really great transformational things happen with our clients. Even when things don't go all the way right, they now know why. And that's the beauty of setting up systems in our businesses. It helps to make things consistent and flow and be reliable, but it also helps bring up the issues, which when you're a business owner and you're trying to grow and you're trying to scale, you got to be able to identify those issues before they become issues, the red flags, the yellow flags, before they become a mountain crumbling down on you. So I have said this before, but I started these videos by saying that business owners don't struggle because they're bad at business. You don't. You're not bad at business. The struggle comes because nobody taught you how to read your numbers. Nobody taught you what to do with them. And now I believe more than ever that this is becoming more and more important and more necessary for creating success and sustainability and longevity, no matter what happens. Because I don't know, maybe it's the older I'm getting, but I'm like, there's always something, whether it's the pandemic or another catastrophe or something happening in your family, or with you personally. You have to be prepared, and you got to have a plan in place, a process in place to be able to make sure things work sustainably and that you are profitably successful to have a business that can support you. So today, the tool, I want to just reconfirm, the tools exist, the framework exists, the knowledge exists. And if you've been listening, you've started to build your foundation, hopefully, from listening to these episodes or podcasts or lives or wherever you're at. Working on these things like CEO mindset, tax strategy, profit design, it's not nothing. It's actually everything. So take what you've learned and do something with it. Your business and your future self will thank you. So that's it for today. If any of these episodes have resonated with you, if you're ready to stop guessing and start building a business that is profitable by design, I would love to be part of that journey. My team would love to be part of that journey. Sidekick Accounting specializes in exactly this work. So book your strategy call. You can go to chatwithmeg.com. Thank you for spending time with me on Profit Points, and I will see you next time.